So Ryan, with CollectRx, you guys are doing a lot of what they call underpayment reviews for out-of-network claims in the drug rehab business.
Yeah, that's correct. We've been heavily involved in behavioral health for almost 20 years now.
20 years. And so talk to me first off about out-of-network and in-network, and why you like, or why your business is focused on out-of-network versus in-network. Because in-network.
So, yeah, I mean, I think a good place to start is just, what we do is we focus specifically on out-of-network claims that have already paid a provider what the insurance companies have deemed is a quote-unquote reasonable and customary amount. The reason why they do this is because the provider does not have a contract with that insurance company.
Yep.
For our company to be able to make a difference for a provider, we need to be able to operate in the same gray area to drive revenue. What I mean by that is that if the insurance companies price a claim and say it's a reasonable and customary amount, that is really a gray area or a black box that they're pulling numbers out of. That's where we can have an actual impact as opposed to a fixed amount, if that makes sense, right? So
a fixed amount would be in network.
That's correct. So you're an in-network provider. You've entered into an agreement with the insurance companies that your billed charges will be submitted to that insurance company. The insurance company is going to pay you a percentage of those bill charges. That is the agreement, and they enter into that agreement with the understanding that the insurance company will drive patients to their business. When a provider is out of network, that agreement obviously doesn't exist. So the provider can charge whatever they want, but the insurance companies are not going to pay whatever the provider charges.
So how does so the provider can charge whatever they want, but the insurance company can also pay whatever they want, right?
Absolutely correct, but they have to have some type of rationalization as to why they paid what they paid.
And so they can make up the numbers as they go along, and they do that through other rehabs in the geographic area. Is that one?
Yeah, they price. Well, they use their pricing. There's literally thousands of different data points that they pull from to come up with these numbers, but the most ones that they rely on heaviest are past experience with like providers in a geographic area. What is a national reimbursement for that specific code that was billed, and then they balance their relationship with the employer groups too. At the end of the day, the employer groups are the ones that are purchasing the policy, so therefore they're the insurance company's bosses. So they factor in how much blowback they'll get from one of these employer groups if they vastly underpay a claim or if they just don't pay it at all. And then they also look at patient consideration as well, but the three that I mentioned are the biggest ones.
So if, let's say, an out-of-network claim, the provider charges $1,000 and they were only paid for that's for a day's worth of treatment, and they only get paid $300. How does your process work to collect the other maybe $200 or $50
or anything? Yeah, or anything, right? I mean, it's going to be very important that the provider has some sort of comparable data to make their arguments. So if the insurance company is going back to the provider and saying, hey, we priced you at 30% of your bill charge, which is what this scenario would be, and here are the reasons why, it's based off of a percentage of like providers that we're paying in a geographic area. You can't go to them and say, hey, I think you owe me more money because you paid me more money on a claim last week that looks similar to this. That won't work. You need to have a very large pool of information to draw from.
So a sample size of 100 claims or 50 claims of past clients, and maybe with other insurance companies, or specifically with that insurance company?
Well, the more detailed and the more specific, the better, right? So if you can pull in like providers in that geographic area, that's great. Other actual payers is not as effective as focusing on the one that priced you. They don't really care what Cigna's paying you. They don't really care what Aetna's paying you because those are totally different term policies.
Gotcha.
Right? So you want to be payer specific. You want to try, well, you need to be provider specific, right? Obviously, you can't use comparables with a dentist if you're in behavioral health.
Right.
And then you want to try to sync the policies up as much as you possibly can, tying it back to an employer.
So, and then how far back can you go? Is it, it's different for each insurance company?
It is. Well, for the all intents and purposes of what we're talking about, we would be working within the parameters that the insurance companies put forward. And we would have to look at their timely filing restrictions. Each payer is different. Give me 1 second, Jim. I got a lawnmower outside. Let me close this window.
Yep.
Okay, so as I was saying, each payer is different. They each have their own rules. We need to play within those rules. So the big payers that we work on are Aetna, Cigna, and United Healthcare. Aetna has a 9-month restriction or 180 days. We push the envelope a little bit further than that just to see if we can pull extra claims in for our clients. United Healthcare has 11 months. We pushed our reviews out to a year for the same reason. And then Cigna actually allows you to go out 18 months. Now, this restriction, again, is because we are appealing within the constraints of the insurance company's provisions. There are other avenues to go. For example, you can start involving legal entities and attorneys. They can usually go out much further, but that is a much more aggressive tactic. Obviously, you're submitting demand letters, things like that.
So let's say generic rehab in, let's say, California, Florida, New Jersey. They have, let's say, 100 beds, and they're doing, let's say $1 million a month in top line revenue, just to keep the numbers simple. Yeah, and they got paid $1 million a month. I mean, when you go in there, you can pick up an extra, what, 10% in top line revenue or more, or
it could potentially be more, significantly more than that. So forecasting out payments like that is very difficult in the out of network space. And it's because the claims are so unique. Out of network is a moving target. It changes daily in certain circumstances. But I would be very comfortable saying that, a 10% return on the claims that we dig out of the portals for them, or the ones that we identify for them, I should say, is not unrealistic. I think it's, in many cases, it's much higher.
Okay, so then let's talk about the current billing operations at the company, and either if they're using a third-party billing or they're doing it in-house. How does that work? I mean, they're already doing the billing. They're up to speed. Everything's been paid in the last 3 months. You don't want to go into those 3 months that they've just gotten paid on everything, right? And
well, I mean, first and foremost, when 90% of our clientele utilize some sort of outside billing vendor, it doesn't matter to us. I mean, we look at the claims through a totally different lens. So in the billing world, the most important part of doing that exercise is getting the next claim out the door, getting it out clean and getting the initial payment in. So let's say, for example, that billing company sends out a claim for $1,000 and they get paid $800. It is in their best interest to move on to that next claim. That little 20% delta is not worth the squeeze than to slow down the entire billing operation. So, and the reason why is that appealing claims is very time consuming.
And that's where you, right?
That's exactly where we come in. So that little 20% delta right there, even though it's not a lot of money, because we have the data and analytics that we've been compiling over the past 20 years and 5,000 providers nationwide, it allows us not only to make the arguments on the cases, but it allows us to identify winnable cases easily too. So that 20% delta, even though a billing company passed on it, and as they should pass on it, we may look at that and say, okay, well, based off of the data that we have, you make one call to this certain entity and you should get that payout fairly easily. So our margins are already pre-calculated in our rates. We can do that work and do it quickly, effectively. And, obviously, if you scoop up enough of these for a provider, you're talking about real money.
Gotcha. So would you consider yourselves an auditor, or you're doing an auditing type of service in some
I
way?
mean, I would say that we are. It's a really good question, actually. So I think we're a little bit of both, of being an auditor and kind of a higher gun for additional revenue, right? Just finding claims is one part of it. That is actually, it's difficult, but it's not the heaviest lift. The real work comes after, once you start actually working these claims, navigating the system to make sure you're talking to the right person that can actually make a decision on an additional payment, making sure you're speaking to the right entity. So it's not always just the insurance company to go to. Sometimes it's an employer group. Sometimes it's a different entity called silent PPOs. It's going to be important that you know kind of which avenue to take. And then when you get a hold of these people, what arguments to make.
Right. So you're essentially a collections agency.
That's exactly what we are. We are definitely a collections agency, but not your traditional one, right? So traditional collection agencies are going after patients. They're going after any avenue where they think they can find money and push that buck. We go specifically after the insurance companies and only on out-of-network claims.
And do they go, oh no, it's CollectRx again?
They definitely know who we are, Jim. We have some very large national clients that we process hundreds of thousands of claims for over the years. So there are certain payers that actually have carved out divisions to deal specifically with us. So they know who we are, and I will tell you that the majority of them don't like us very much, but we do play by their rules. So
It's just the cost of doing business for them.
you got it. And I will also mention this too, right? We've been around a long time, but in comparison to those insurance companies, we are a tiny little player. Those are massive, multi-billion-dollar corporations.
Okay, so
we're an annoying fly, right?
Yeah,
we get the job done, but we're not beating the company over the head with a sledgehammer.
So talk to me a little bit about EMRs and where do you see them going in the billing space, and how are they playing a role?
I mean, I can't really speak to EMRs too much. We don't interact with that part of the business specifically. Where we do the majority of our work is going to be in what are called online payer portals, which are these repositories of electronic or explanation of benefits, which is really where we grab our data. We're familiar with most EHRs and billing platforms out there. So unfortunately, I can't give you a ton of insight into the future of this.
Okay, so those are like Change Health,
right?
And
right. So
those are the clearinghouses, if you will.
So you've got clearinghouse. So first you get your billing platform, right? Billing platform is used to create the claim, which is then sent out to the insurance company. Once it gets there, then you've got a clearinghouse, which is basically going to house the information electronically and can potentially then branch out that information directly to the insurance company and then send feedback information back to the provider. The EHR is more of a records management system, which links those exactly that entire thing together. So in the behavioral health space, we typically don't use a lot of information that's stored in medical records because remember, we're looking at claims that have already paid something, right? So that type of information is very valuable when you're working at denials. You're going to need to actually look at the medical record that was sent. A lot of times you'll have to redo them and then resubmit them based off of what the feedback from that clearinghouse, which is something that we can do. It's just not our core business.
So we were talking about underpayment reviews versus payment or post-payment recovery services, where they are basically denials, where they. So how often does it happen where, I'm sort of like the complaint department for the rehabs. They're like, Jim, we had everything right. We had the right CPT code in there. We got the VOB done right, and everything was right. She had the policy, and we did everything right, and they denied the claim.
We're like medical necessity. So that is something we see all the time. So that really is just a delay tactic that the payers deploy. So United Healthcare is famous for this, especially in the lab space. they will repeatedly ask for medical records over and over and over and over and over again. And they know that with these poor labs, that the likelihood of them getting that information from the referring physician is very difficult. So it's a way for them to basically just get away without paying a claim. Now, they'll do the same thing in behavioral health too. And this is pure speculation. I don't know this to be a fact, but it would make sense. We believe that the payers are doing this in an effort to recoup payment. What I mean by that is that they can deny a claim 30 days, 60 days, 90 days out, requesting the same medical record over and over again. And what happens to that claim, the money's sitting in their bank account. So it's still accruing interest and interest and interest. So it's covering any type of payment that they would make. And we do know that, insurance companies use it as factoring for payment. So take it for a grain of salt of what it is. That's just kind of our inside speculation.
Gotcha. So when you work with the rehabs, as far as your contractual setup goes, I mean, are you charging them a big deposit? Are you charging them by the hour? Or are you commission?
Total contingent base in its truest sense. So no upfront cost, no technology downloads on the the provider side. There's no minimums. There's no monthly maintenance fees, no cancellation fees, no long-term binding commitments. None of that stuff. It's a true contingent arrangement. We only get paid if we're successful.
Well, that sounds like a pretty low risk way to do business with you.
That's the idea, right? Is to live and die by our results. Because if we don't live up to expectations, a client can walk whenever they want. So it keeps us honest.
Gotcha. So how about other insurance companies like Anthem or Blue Cross or TRICARE? Or I guess TRICARE is all they're all in network, right? So
TRICARE is a difficult one that we don't. TRICARE, Blue Cross Blue Shield, Humana, Kaiser. There's various different reasons why we don't work with these payers, but just the long and short of it is the success rate internally is half of what it is for the other payers. And just to be straightforward, we do live and die by our results, right? So we do have a pure contingent relationship. So we're absorbing all the risk with those payers because the success rate is lower, right? We don't have the appetite for that type of a risk. And then also, you've got companies like Blue Cross Blue Shield that will, punish a provider for, going the extra step and getting that additional payment. They'll just send it to the payer, to the patient.
The patient, yeah.
You got it. In those situations, obviously, it's a massive loss for us.
So when they send it to the patient, guess what? The patient goes out to party.
You got it. Yeah, that's a whole other story, right? That is at a certain point where the insurance companies should be liable for any damages done to that patient, especially in the addiction space. They know the medical records of these patients better than anybody else. To give them a check for $30,000, $40,000, $50,000 while they're still in recovery is just
it's lunacy. So what other questions should I be asking about behavioral health, and what companies should be thinking about when they're before they hire you? I mean, if they're running their business the way they should be and doing everything the correct way, what's the best way that they can run their business so they don't have to hire a collections company like you? Or I don't know if that's the right question to ask, but
no, I think that's a good question. It's valid. So what we do on the back end of the billing cycle, we feel is the most difficult part of it when you're out of network. Obviously, I have a vested interest in saying that you should use our company or someone like us to do that type of work. The other side of it, though, that's just as important is the upfront part of billing, meaning the verification of benefits process and the UR process. Very complicated. And we can only do our work successfully if it's set up in the beginning, right? So what I mean by that is if you admit a patient that has no out-of-network benefits, no one's going to be able to help you get that payment. No one's going to be able to help you get those additional dollars. That's dead on arrival. Or if you admit a patient that has out-of-network benefits, but they reimburse to Medicare rates, nothing that really anyone's going to be able to do for you. I mean, you'll probably be able to argue for additional payment, but you're talking about rounding errors at that point. You know,
Right.
that part of it is just as important as what we do on the back end. One other thing we haven't talked about too are what we call prepayment negotiations. And these are scenarios where companies like Multiplan or Mars or Zealous, or namely the other 600 of these vendors that are out there, are going to reach out to a provider looking for a discount on their bill charges before the adjudication happens. So before any type of decision has been made on that claim, right? So in this scenario, just think of it this way: no payment has been made, no EOB has been generated. Typically, providers don't have visibility on this because they go directly to a billing company. The billing company is in their best interest to sign off, you know, relatively low, right? Meaning, like, if they get an offer at 50% of bill charges, that's an absolute win for a billing company. You know, they don't have to report that back to their clients at a granular level. It goes into the monthly reports, and a 50% return on an out-of-network claim is actually pretty good, right? So to the billing company, they can get a daily summary from one of these companies like Multiplan, where all of these, you know, offers to negotiate are in one spot, and they can just click down the line, accept or deny, accept or deny, accept or deny. And at the end of the day, that's really not negotiating. What we would highly recommend, and this is a service that we offer too, but even if you didn't use us for this, I would highly recommend reaching out to your billing company and asking them, hey, how many of these are we getting a month? What is the average allowable that we're signing off on? Really, really important. The service that we offer would obviously be to negotiate on behalf of the client. And we would leverage the same data and analytics that we have on the post-payment end of things to drive those allowables or those billed charges, the payments, up to the highest point possible, and really knowing that you're getting the most out of each one of these claims that you can possibly get. So again, I would say one of the biggest takeaways from this conversation is definitely ask your billing company about multi-plan offers. Here's another one too. Ask them if they signed a contract on your behalf with Multiplan. That's also, you know, could be another potential major downfall. But yeah, I mean, we can talk about that another time. That gets a little bit complicated, but
Okay.
yeah, it is a big part of out-of-network billing.
So I know a billing company that has pre-negotiated rates with Multiplan.
Yeah.
And anyway, and they can get some pretty good numbers.
So let's talk about that. So understanding who Multiplan is very important. Multiplan kind of plays themselves off as an advocate for the providers and an advocate for patients. We've seen this a lot in the behavioral health space. They come to providers with these amazing offers. They'll say, hey, we'll give you 80% of your billed charges, or 80% of the allowed amount, or 80% of out-of-network pricing. What they don't tell you is that they work for the payers, and that the payers that you're getting this contract with don't have to access that contract if they don't want to. So you start to think it through. You're like, well, why would an insurance company ever access one of these agreements? They're not in the business of losing money. The short answer is they're accessing that contract because it's benefiting them. They're basically taking money out of your pocket to do so. Meaning that if that contract wasn't in place, the claim would have paid higher, pursuant to the contract that they have with the employer group. Does that make sense to you?
Yeah, it makes sense. And insurance companies, they're more profitable than banks.
Absolutely.
They're the most profitable financial concerns in the country, I think.
Yes, they are. And so I think that with that in mind, there's no scenario where they're going to be entering into an agreement that does not benefit them, period. I can tell you without a doubt that even some of the largest healthcare providers in the country, we work with them, don't have in-network contracts at 80% of bill charges. So if something looks too good to be true, it most likely is.
So they don't have in-network contracts with
Multiplan. That's correct.
Okay.
Yeah, Multiplan is not a payer. They do not process claims. All they do is price them. And they work directly for the insurance companies. So if you get a contract with Multiplan, and Multiplan, this is what they tell providers all the time, sign this piece of paper and you'll be in network at 80% of your bill charges, whatever the rate is, with all of these payers. It does not work that way. That contract, quote unquote contract, is a cap of your payment. It is not a guarantee of your payment.
Gotcha.
I cannot emphasize this enough, that if you have a contract that name a number, without the contract in place, it most likely would have processed higher, or it may have processed lower to begin with, but the opportunity to appeal the claim at a higher rate exists. You got it. It would actually be there without that contract in place. You just put the contract in, you're done.
Gotcha.
Right? So, yeah, so follow me. You've got the contract with MultiPlan at, I don't know, 70, 80% of bill charges, right? It processes, goes straight through, you get that 70, 80% of bill charges, everyone's happy. What they don't realize is without the contract in place, let's say it goes to the insurance company and processes at 40% of bill charges. But because you're a smart provider, you find that 40%, you say, okay, I'm going back to the payer. I'm saying I want 100% of my bill charges. In certain circumstances, it will pay just that.
They'll pay the 100%.
99, 90%, it'll pay higher than whatever that contracted rate is.
Really? Okay.
That's the only time those payers will access those agreements, is if it benefits them, right?
Gotcha. Wow, it's a strange world we're living in right now. I mean, they're
well, to give this a little credence too, just so
it's a moving target.
Yeah, absolutely, it always is, and it changes daily too. Well, I can tell you this: being in this business, it definitely keeps your toes, on your toes. One thing that I think is important to mention here too is that I'm not just speaking about this from, personal experience. Man, I've been doing this a while. I know a good bit about out-of-network and how it works, but our company was actually started by the same guy who started the original MultiPlan way back in the 90s. It was a guy named Don Greenberg. He's actually famous for creating the original 9 databases, which insurance companies would use to calculate what reasonable and customary actually is. He had a company called About Health. About Health ended up getting sold to a company called Concentra. Concentra became Viant. Viant is now MultiPlan. And the start of it was all this guy, Don Greenberg, who ended up starting CollectRx after he sold his first company. So we have a very, very deep understanding of how these companies operate because we used to be them. We still staff very heavily from repricing and negotiation companies like MultiPlan. Our headquarters are both in the same town. Our negotiators, almost all of them, previously worked for MultiPlan. Our co-founder is a guy named Sonny Bloom. He actually ran the operations for MultiPlan for almost 10 years. He is the one that actually drafted the templates for the agreements we were just talking about. So we've again, a deep understanding of how this stuff works.
And so the other guys, like you said, Mars and Zelos, I mean, they're smaller players in this space.
They are, but I would tell you this too. It's interesting that you bring that up. The majority of those little companies that I just mentioned are actual subsidiaries of MultiPlan. So MultiPlan is a large umbrella company. They own Mars, they own Viant, they own a lot of the other guys too. PMCS. MultiPlan is no small company. They're publicly traded, PE backed by the Carlyle Group. They're massive, big boys.
MultiPlan's a multi-billion-dollar company.
Multi-billion-dollar, yeah. I'd say in that range for sure.
Really?
Yep.
Wow. And so where do you see I'm going to ask you to forecast. So looking at the rehab space in the next 3 to 5 years, where do you see it going? Is there more in-network or?
I would think that's fair. I mean, we had this conversation recently about all of out-of-network in general, and hey, is there a tide turning? Is it less than there was before? And is out-of-network going away? We don't think so. I mean, the pure fact that the insurance companies, the amount of revenue that they generate off of selling out-of-network benefits is nothing they're going to back away from anytime soon. So they love selling those policies. And look, patients, people like you and me. I want to have out-of-network benefits. I want to be able to go see what doctors I want to go see. What happens if, I break my leg and I'm skiing and I'm in a different state, that doesn't have coverage for my insurance, you need to have those benefits. So no, we don't see them going anywhere. I don't necessarily think it's going to be, a cakewalk to get reimbursements. It never really has been. And the payers are constantly coming up with new ways to basically screw over providers or underpay them. It's going to be really important for providers that cannot get in network or specifically choose to be out of network to beef up their collections effort to make sure that they're on top of this type of stuff.
So is the behavioral health space more of a target with denying or shortchanging?
No, I don't think so. I know it feels that way. I think the insurance companies have basically just started to deploy the same tactics that they've been using for decades with other providers. When we compare the behavioral health space to, say, the emergency medicine space, it is night and day. Those guys are really getting walloped. So no, I don't think that they're picking on behavioral health in general. I think that's just par for the course for the payers.
Yeah, I've got a great story on the emergency medical space, but I'll save that for offline conversation.
Okay.
The amount of money that they charge was it was astronomical for 1 hour's worth of work.
Oh, that's a whole other story. And those rates aren't going to go down anytime either. It's like this perpetuating circle that just, begets and begets and begets.
So, yeah, I mean, so 5 years from now, you think it'll still be kicking the can down the road with the out of network stuff, and a lot of the providers are still going to try to go in network because they can project what their earnings and revenue are going to be?
I think that that's definitely a possibility. It depends on who's financing these providers. I know that there's a lot of private equity in behavioral health space currently, and doesn't seem to have a trend to slow down. Private equity guys like to forecast their financials as tight as they can, so that definitely could drive more in network. As far as the providers out there that are not PE backed, I do think that there's still an opportunity in the out of network space. Again, it's just as long as you're savvy. And I mean, this is going to sound obvious, but I'm continuously surprised by providers that don't do this. Pay attention to your billing. Just pay attention to the way learn about it. Learn about how the claim gets processed. Stay on top of the monthly reports that you get. Ask full transparency from your billing company. Start there. Because you don't know what you don't know, and that can be very dangerous when we talk about your money.
So the billing companies have really turned into collections agencies also, right?
If they're good, they should be, right? I mean, that back in the day when we first got into this space, it was an exercise. You bill it, they will pay, or what they thought, right? So that's exactly where billing companies focus, was just to get that claim out the door and get that payment and move on to the next one. They have gotten more savvy over the past 10 years.
Yeah.
So yeah, I would tell you, absolutely, Jim, you need to have a very strong collections arm with RCM or billing.
And so you know some of the better billing companies than others?
Yeah, I do. And there's ones that we would recommend. Yeah, there's some good ones out there. There's also some very bad ones too.
Gotcha. Okay. So another quick question for you, and I think we can wrap this up. So let's say I've got a client that is about to sell their company and they're selling the assets. So new co's buying old co. Old co still is going to get some billings, some claims that are going to get paid. They're coming back in. Can they use your services even though they are no longer in business and that transaction has come about?
Absolutely. Yeah, so that AR is still live as long as it falls within the parameters that we discussed earlier, right? 18, 12, or 9 months. Absolutely. Gotcha. Yeah, that's
okay.
They'll still get the payments. Sure.
Gotcha. Well, that's really good to know. Awesome. So that's great. I'm going to shut off the recording here, I think. Stop recording.